the BRICS thing has cooled off a lot, but kind of like what you said, Bo, I think people have a hard time getting out of the way of what they never see coming. And even the people who were aware of the BRICS have turned away from it because of the time. It's been easily dismissed, but the pieces are being put in place now, in fact, are already in place. And they've done so in a very cunning manner to where I think they will out-accentuate people's expectations. Let's just put it that way. We can come back to that. I know we're going to talk about that, but there's so many things happening here in the States as well. You know, you got you have a stock market as an example where the insiders are moving away, the Warren Buffetts of the world and the Jeff Bezos and the Jamie Dimons and, you know, the Mark Zuckerbergs. They're all selling. The insiders have been selling. Buffett's sitting on $500 billion in cash. And last week, we saw the largest volume, retail volume in like an hour or two of $4 billion the market's ever seen. And the retail public now makes up 36% of the trading volume on the stock market. That's 3 times the historical average. That's not good because the retail is typically the ones that get left holding the bag. 50 billion in inflows on the retail side since April 8th, and that's record amounts as the institutional traders are retreating.
Silver is sitting near $44 today, yet 75 million ounces just vanished into private vaults. Wall Street can't get them back. Insiders like Buffett, Bezos, and Dimon are dumping stocks. Retail investors are flooding in like never before. At the same time, record amounts of gold and silver are being physically delivered worldwide. Family offices and sovereign wealth funds are taking possession. Banks and institutions are quietly stepping aside. Andy Schectman says this is the most aggressive physical silver accumulation in history. When the dam breaks, the price could explode. Stay tuned. This is one you cannot afford to miss.
And that's a scary thing. Of course, you got the downgrade by Moody's, which to me doesn't mean a whole lot. But what I found interesting about it was their debt-to-GDP projection of 134% by 2035. Now, that doesn't take into account the unfunded liabilities, or we'd already be north of 200%. But there have been studies done that there has never in all of history been a country that's crossed the 130% debt-to-GDP ratio. Japan is the only one right now, and they're well north of that, and the jury is still out, but you can see their bond market is imploding right now. But no one's ever come back from that line without either hyperinflating or outright defaulting. And at the same time, you have, you know, an administration that came here with Doge and aspirations of normalizing our fiscal irresponsibility, and yet they're raising the debt ceiling. Elon Musk said, well, I tried, but more or less Congress has stonewalled me. And that's not just the Democrats either. And so we have an indebtedness problem where we're taking in $5 trillion in tax revenue each year and spending $7 trillion. So that doesn't work. You're continuing to destroy the value of our currency, to make other countries move away from the Treasury market. And that's something else we should talk about too, because as our debt keeps going higher and higher and higher, and President Trump would like to see lower interest rates, and they've lowered interest rates, you know, since he's taken office. They've tried to lower interest rates. And what do you see? Last week, we see $20 billion bought in 3-year treasuries by the Fed, $34.8 billion bought in 10-year treasuries by the Fed, and $8.8 trillion in 30 treasuries bought by the Fed. This means weak demand for long bonds. Foreign buyers are pulling back. The Fed has to come in and monetize. These are all very, very bad things. At the same time, Japan's bond market is doing the exact same thing. And you look at a system the people are involved in, you know, Bo says people will be run over by this. They will be. Bank of America is sitting on $700 billion in bonds that they bought in 2020 at 1%. That's $100 billion right now in unrealized losses. Not to mention, we need to refinance $9 trillion in treasuries this year, $28 trillion by 2028. So let's go to 2028 for a moment. We take in $5 trillion in tax revenue, times 3 to get to 2028 is $15 trillion. Well, we're halfway to what we already owe, those bonds that are coming due, these short-term bonds. That doesn't take into account the $2 trillion per year in deficit spending. So we're broke, we're insolvent. We can't even, in essence, come up with enough revenue to pay for the treasuries that are coming due. At the same time, you see China slowly selling treasuries. They are now number 3 behind the United Kingdom, who is the second largest holder of our treasuries behind Japan, who has already come out Japan and said that selling those treasuries is certainly on the table. And you look at the United Kingdom, one of the largest debtor nations on the planet, buying the debt from the largest debtor nation on the planet. It's 2 drunk guys holding each other up. And so it doesn't work. And then you see the United States become a net importer of gold to a degree that no one has ever seen before, month over month over month over month over month. In fact, if we look at this last month, the May gold contract will go down into the books as the highest physical delivery for an inactive contract in COMEX history. 25,401 contracts have been delivered. Multiply that times 100, and that's how much gold in ounces has been delivered. But an interesting thing that I read today was that 526 of those contracts as of today are open and undelivered with 1 day to last notice. Now, that tops the prior record set on January this year for an inactive contract. But what's interesting is that those 526 contracts might be the highest ever left standing with 1 day delivered. And basically what that is insinuating is that there is a short that does not have the metal to deliver. Usually there's only 1 or 2 or 3 contracts left remaining at this point. When you have 526 times 100, right? So a lot of ounces, 50,000 plus ounces that have not been settled yet. That means there's a short who probably won't default. They'll come out and find that gold, hopefully. But it's an indication of the cracks that are appearing in the COMEX market when massive deliveries are coming into COMEX, and this has never happened before. So I guess I would just simply say that you're looking at a rush to physical gold, a move away from treasuries by the foreign nations who have been our biggest creditors, and a move away from equities by the big money, the insiders. At the same time, the retail investors are pouring in record level hand over fist. What could possibly go wrong with that? So yeah, I mean, I'm not bullish. I wish I were, but I'm not. Last thing, how about this one? Currently, the top 10% of American households account for half of all of the retail consumption. So when you talk about this being a strong economy, my ass, it's a strong economy. You got the top 10% buying everything, and the bottom 90% are struggling in an environment where we're told inflation is under control. It doesn't seem that way to me, as the cost of living just seems to be going higher and higher and higher.
Andy says BRICS de-dollarization hasn't gone away. It's just gone quiet. The groundwork is already in place. Insiders are cashing out of stocks. Buffett is sitting on nearly $500 billion in cash. Retail now makes up 36% of trading volume, triple the historical average. That's dangerous, because retail is usually the last money in, left holding the bag when markets turn. Since April, retail inflows hit $50 billion, a record, while institutional traders retreat. Moody's projects U.S. debt to GDP will hit 134% by 2035. No nation has crossed 130% without hyperinflation or default. Japan is already above that line. Its bond market is cracking right now. The U.S. takes in $5 trillion in tax revenue, but spends $7 trillion every year. To fill the gap, the Fed is forced to buy Treasuries, $20 billion in 3-year notes and $34 billion in 10-year just last week. Foreign buyers are pulling back, so the Fed must monetize the debt. $9 trillion of U.S. debt needs to be refinanced this year, $28 trillion by 2028. China is selling Treasuries. Japan has hinted it may do the same. Andy calls the UK and US 2 drunk guys holding each other up, buying each other's debt just to stay standing. Meanwhile, the US is now a net importer of gold. May saw the highest COMEX delivery ever for an inactive contract. Over 50,000 ounces were left undelivered with just 1 day left for notice, a rare sign of stress. Silver deliveries were even bigger, near 75 million ounces, a new record. 16 million ounces moved from bank hands to non-banks, family offices, sovereign wealth funds, and manufacturers. Institutions are getting out of paper silver, and real players are taking delivery. Andy warns that BlackRock and JP Morgan suppress silver prices while profiting from defense contracts. LBMA trades up to 3.5 times the entire annual mine supply daily, a sign of extreme leverage in the paper market. This is a full-blown scramble for real metal, even as the price stays artificially low.
So, my home state of Florida here, on July 1st, 2026, will be the third state to officially recognize gold and silver bullion as legal tender, with no sales tax on sales, and even authorizing payment systems such as PayPal to transmit funds in gold and silver. So things are moving in ways that really we've never seen, from legalizing gold and silver to our creditors moving away to the institutions moving away from equities, and the big retail investor now being the largest participant. Lots of potential points of interest and potentially of concern. To me, there's no question but that the military-industrial complex is holding down the price of silver. I mean, there is absolutely zero doubt in my mind. And it's interesting that BlackRock, along with JP Morgan, is the primary custodian of SLV, the world's largest silver trust. So you look at a company like BlackRock, who owns all of the military contractors. They build the high-tech weapons that need silver, so they suppress the paper price. And then they blow up countries like Ukraine and get the reconstruction contracts, that being BlackRock. And so it's a game that they've played to enrich them, so much so where you look at the LBMA, who is trading 3.5 times annual global mine supply every day, as much as 3 billion ounces per day. They claim to trade 290 million per day, but they say those numbers are 10 times understated, as they only post the final settlement numbers. We look at the May contract also, which is a active delivery month, and there's somewhere just shy, I think, of about 15,000 contracts that were delivered. I haven't looked since last week. Last week it was just shy of 14,000. My guess is it's somewhere between 14 and 15. If it were 15,000, you're talking 75 million ounces of silver. Who the hell's taking possession of 75 million ounces of silver? So even back it up and say 65 or 70 million. I don't know what the exact number is for the final numbers. But you're talking record amounts. It blows away the all-time record. And at the same time, we saw last week that about 16 million of those ounces were delivered from banks to non-banks. It was the third largest sale in history as of last week by banks to non-banks for a single COMEX contract. That means you have family offices and sovereign wealth funds and manufacturers. And it also, to me, signals that institutions are kind of getting out of this game as they're selling off their position or closing out short positions by delivering. It's a full-blown scramble for real metal, whether it be gold or silver. And the price is a tool of misdirection. And the only way that you can continue to manipulate a market is to push it in the direction that it is going. But there's massive deliveries here. There's massive deliveries all around the globe in silver. Eric Young, King Kong on X, is phenomenal. And he said, have patience, silver stackers. China's going around buying everything they can at these subsidized prices, using the West subsidy to accumulate everything they can because they're thinking in terms of generations for their future. They're the same country, the second largest producer in the world, that's going all around Asia. I mean, South America, in particular, Peru, buying up all the doré and the concentrate. Now, why would they do that? Doré is a crudely refined bar, as we've talked about before. Concentrate is a sludge byproduct of the mining, paying double what the West will, sending it back to China to refine it, not just in silver and gold too. But why would the largest producer of gold and the second largest producer of silver, if price was really indicative of value, be going out of their way to not only stand for delivery across the board on all this stuff, but also to go around the world and buy unrefined silver, disintermediate the market, and send it home?
Insiders are dumping stocks. The Fed is monetizing debt. Foreign buyers are walking away from Treasuries, and 75 million ounces of silver are vanishing into vaults. Andy's message is clear. The clock is ticking. If you wait for headlines to confirm a shortage, it will already be too late. What do you think? Are we on the verge of a silver supply crisis? Drop your thoughts in the comments below. Like, subscribe, and share this video, because the more people who understand this, the better prepared we all can be.